Good morning. Thank you for joining. My name is Byron Cunningham-Scott. I work with Accolade Financial Planning Services, and my contact details are up on the first page. Our intention really is a little different to other insurance offerers. We all get bombarded by insurance adverts, and how do we distinguish between them? I think the key point I want to focus on is that often you can just click on whichever insurer is offering you a product, and you end up not insuring yourself for your personal and or business needs, and end up then actually never getting paid, and sometimes premiums can escalate at a rate that you are not expecting. So affordable and logical is really the point I wanted to speak to. How do we make it affordable? First thing is, what do I need? Do I need all the offerings that I'm going to go through? And does it make sense for my business and for my family? Short-term needs. I just want to focus on that quickly. So asset cover, obviously in the plumbing industry, vehicles are really important from the business point of view, making sure that your vehicles are properly insured so that you can keep your business running at all times. Buildings as well. Where do you keep your stock? Is your building insured correctly, and are the assets within that building insured correctly? This applies once again to both businesses and personal. Transportable assets. For example, should you be transporting a geyser from A to B and it happens to fall off the back of the truck or get bumped somehow, are you actually covered for that? Medical cover. That relates to staff and obviously for yourself. We're able to offer a low-income medical cover for staff, and also obviously all the way up to tier to the top medical aid schemes that are available. Public liability, that's also very important for the insurance industry, although it's really affordable. It's obviously attached to the other assets that I spoke about, so to vehicles, etc. Should, for example, during one of the sites that you're working at, should somebody get injured, or one of the client that you're working for's assets be damaged by mistake, we are able to cover that as well. This one is really important for the plumbing industry, in my view, temporary income protection. So what happens if I get injured at work? And obviously, the sort of work that the plumbing industry does open you to injuries. In fact, case in point, I went to a meeting on the previous Monday, and there happened to be two plumbers at the meeting, and one had cut his wrist with a chainsaw. The other one had a car accident. But should they have been more serious and weren't able to actually work, given that most of your businesses are run by yourselves, how do I make sure that my business continues if I'm not able to be there? So there's only two insurers that actually underwrite the plumbing industry, one being Bidvest and the other being BrightRock. So we work with both of them to make sure that should you not be able to work, your business can continue, your expenses at home are covered, and so that when you're back on your feet, everything's hopefully still in order. So that can be up for 24 months, and depending on the amount that you need, we can tailor that to your requirements. Staff liability. This is away from public liability. For example, should you have a female staff member and she requires maternity leave, how do you cover that? And should you need to fill her position in with somebody else, how do we protect against those? So that's pretty important as well. Something we don't like to talk about, but is a reality in every workman's space, not only the plumbing space. Sometimes we do have defective workmanship, and it sometimes is not even the service provider's fault. And then, for example, should you be working on a job and the electrical cables are damaged for some reason, and you need to get somebody outside of your space in to come and fix the damage, that certainly can be insured as well. So that covers the short-term needs. Some of them are married to the long-term needs, but I'll elaborate on that now. So obviously the main long-term need is life, but I just want to go into detail on that. Life is usually up until age 65, and there's a reason for that, and that's because life is generally set up so that during your period of life, when you still, for example, have a bond and younger children and those sort of potential needs, should you pass away, then that life insurance is there to protect you against those things. So I mentioned education. I have a colleague with that I work with. He has 3 younger children, and he's recently attracted, unfortunately, cancer. So obviously we hope for the best, but should that result in not being with us, at least those needs are going to be taken care of, and then obviously we'll leave him debt-free as well. Occupational risk. So this again is talks a little bit to the shorter-term things. So we spoke about temporary income protection, but this is occupational risk. This refers more to disability, so permanent disability. So should you, for example, be involved in an accident where you become permanently disabled, this talks to the life aspect as well. So it can be standalone. Sometimes they accelerate it. What that means is, should you have occupational risk and you become permanently disabled, there will be a lump sum amount. But should it be accelerated, it will come out of your life cover. So we never suggest that. We suggest that it stands on its own, and should you become disabled, the occupational risk benefit will kick in. So outside of occupational risk, should you become disabled outside of your occupation, so for example, you were involved in a car accident and you become permanently disabled, the life insurance companies see those risks as different. So it's important to cover both of those risks should you become disabled. So when I spoke about, so those are the disability risks, but disability on its own is actually a separate subject, because one can be disabled through illnesses, for example, a heart attack or diabetes, or any of the sort of main dread diseases. And so disability then becomes slightly different, and then it talks to dread disease. Dread disease is, interestingly enough, the most claimed benefit out of all insurance benefits. 60% of people end up claiming from dread disease benefits, certainly as one gets older, which is why it's probably the most expensive benefit, but certainly the most worthwhile benefit, in my opinion. Estate needs is another area where people often don't consider it. None of us like to think about death or disability and that sort of thing, but unfortunately, as we know, it is a part of life. So only 1 out of every 9 South Africans actually has a will, and most of them actually don't even know where that will is. Also, wills are vary in price, and often people just go to the bank or to their lawyer, and sometimes those fees are incredible and actually unaffordable. So the average estate winder costs approximately 500,000 rand, which is a pretty big number. Should you die intestate, which means you don't have a will, then your estate will go into the government process, whereby they will wind up your estate. At the moment, government is sitting with 146 billion rands worth of undistributed assets. So your estate will take up to 2.5 years to wind up. Whereas if you use the services that we use, we guarantee a 6-month wind up period. Key man needs. Should you be involved in a partnership, and there's a risk that the business won't be able to run with either one of the partners, it's important to ensure those needs. Should one person pass away, one would need to then purchase that the other partner's share of the business, and or sell it to another party. Or alternatively, should that person be replaced, their spouse or their children may say, look, this is what the valuation of the business was. You need to pay us out. So that's a very, 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 very important part of insurance that a lot of people don't consider as well. So how do we get key man insurance? So a buy and sell agreement is put in place, and a buy and sell agreement needn't be complicated, but the most important thing about a buy and sell agreement is that all parties are able to agree on the value of the business. There's no point in valuing a business at 1,000 rand should it only be worth 100 rand. Firstly, because your insurance is going to be a lot more expensive, and then secondly, actually when it comes to actually claim stage, obviously proof of the business worth is going to be necessary. So it's an important part of businesses of any business, and it needs to be reevaluated on a fairly regular basis. I would suggest on a sort of every 2 to 3 years. My background is investments. So I used to run Sanlam's trading desk and then Barclays trading desk. So that was my sphere, and then I ran a hedge fund. So one motto that I learned to live by was earn 100 rand, spend 99, and then that makes life a lot easier. Earn 100, spend 101, things get a bit tough. So in this space, I'm just going to talk about long-term savings. So long-term savings, we refer to retirement annuities. It's the most popular. Some companies have pension funds within their own structure, but we obviously don't cover those. Retirement annuities, they are attractive for several reasons. The first being that they offer a tax benefit. Any contribution towards a retirement annuity is tax deductible. And then once reaching age 55, you can access a third of your capital up to a maximum of 500,000 rand tax-free. And the rest gets paid out to you in a ratio that you can choose anywhere from 2% to 17% of it. And there are further tax benefits from that as well. Endowments is a similar structure, except for this is a flat tax rate. So should you invest into an endowment, any growth that you receive in that endowment will only be taxed at a maximum of 30%. So 30% flat, and the rest you're able to access. So it doesn't have the same requirement as an RA in the sense that you can access the full amount, but there is an upfront 30% tax on that. There's also other tax-free savings accounts that you can utilize. So the government at SARS allows us 36,000 rand a year that we can invest into a tax-free savings account. And any growth on that is completely tax-free as well. That's also a maximum of 500,000 rand. But given that you're only allowed to contribute 36,000 rand a year, it'll take you a period of 17.5 years. So hopefully over that period, there's substantial amounts of growth. The only disadvantage with that is that should at any stage you take anything out of that tax-free savings account, you won't be able to contribute it back. It comes off the 500,000 maximum. Offshore investments, very important, as we can see with the rand weakening lately, and global chaos, if you want to call it global economic chaos. It's really important to view South Africa as part of this global economy. And how do we do that? So we don't necessarily all have to set up a trust somewhere else and dollarize it. We can access offshore assets locally. They are available, and one can invest up to R1 million without any tax approval in an offshore investment. So I would highly recommend those. Trusts are a different thing. Obviously, you can set up a local trust and or an offshore trust. The attractiveness of this is that should the trust be set up, the tax implications for that is once again a benefit in the sense that you are not seen as the owner of the trust. There are trustees that are the owner. So as the investment becomes due and is passed on to spouses and children, etc., they'll only get taxed at the end of the life of the trust. So there's a big tax element in the investment space. Short-term investments, if you're not comfortable with long-term money, we all need some short-term cash for incidents that we don't expect. Unit trusts are a great avenue. So it's a similar thing to endowments. They invest in similar assets. The only difference is that you can access them whenever you want, but it does fall into a less attractive tax structure. Money market, over the recent past, you would have done pretty well to be in money markets with interest rates going up and equity prices and assets in general having decreased by as much as 30% over the last 6 months. So should you want less risky investment, money market is the way to go. And obviously that includes all types of money market instruments, whether they be corporate-based or whether they be government-based assets. Fixed income, in this space, we refer to bonds like longer-term bonds. So you could invest, for example, in a inflation-linked bond or a corporate bond. But these, although they are short-term assets, they do have a time period onto them. So you could get a 5-year bond or a 2-year bond that you could invest in, and obviously the interest rates vary on that. Savings account is one, obviously, that some people do use. I wouldn't advise a savings account because there literally is almost zero interest on it. And they obviously are quite inflexible when it comes to things like debit orders and that sort of thing. So essentially, it's putting money away at a rate that certainly after tax wouldn't equate to an inflation-based return, but some people do find them attractive from an access point of view. So I just want to get to the questions. So do I need insurance? Obviously, I think it's been made clear that we all need insurance, but it's just what type of insurance. So I just wanted to use this example of my father. He's 88 at the moment, and he took out life insurance, obviously, when he was a lot younger. And like most people, we don't price in the fact that these premiums go up a lot, and over time, unfortunately, in most cases, our income drops off. So in most cases, people, when they actually need life insurance, they're not able to afford it anymore, and their life insurance lapses, which is really sad. So it's important to make sure, yes, I need life insurance, but will I be able to afford it over an extended period so that I can actually gain value from the insurance that I've bought? And that relates to the second question. Can I actually afford it in the long term? This doesn't only apply to life insurance. These are all types of insurances, whether it be also from vehicle insurance to medical aid insurance. All of these things need to be monitored carefully. Sure, I can take out a policy now, and it sounds affordable, but my recommendation is check the fine print. We often hear on the radio about bring us your quote and we'll guarantee you a payback if we can't beat it. What generally happens is that the next year you end up paying for it, and the year thereafter and after. So affordability is really key, because otherwise insurance just it becomes unimportant because you just can't pay for it. So that's a massive problem in the industry. I don't know if I should say this, but there's a reason why they've got these massive buildings around Sandton, and it often is really up to the individual or the business to make sure that they are protected correctly. There's lots of smart individuals in the background that crunch these numbers and figure out the likelihood of the insurance company having to pay. Just to elaborate a bit on that, as far as medical aid is concerned, the input into a medical aid and the output of a medical aid is 100% input equals an 84% payout by the medical aid company, which is obviously why they are around. But they are still absolutely important. How does my family and staff benefit? I've skipped two questions there. How does my family and staff benefit? Obviously, when it comes to the insurances that I've mentioned in previous slides, should I be unable to work, obviously my family can still survive and my kids can go to school. If I'm not at work, how do my staff benefit? They maintain a job, they can upskill, their families are looked after, and my business stays up and running. So that's it for me for now. Just my details again, in case you would like to contact me and have a discussion or a meeting. I'm available. I'm certainly around the Gauteng area, but a Zoom meeting or any other type of meeting I'm available for most times, as long as you just set up the meeting.
All right, thank you very much. Is there anything you'd like to add, Steve?
Yeah, thanks, Byron. Yeah, I think there's a lot of food for thought there. And like I said earlier this morning, there's a vast basket of goods there, that you provide, which is certainly great. And I just want to emphasize in terms of our discussions and what we've had is, we always look at the insurance as being a grudge bar. It's always something that, in terms of a retirement, and I'm guilty of it, is that, you keep saying, I'll do it tomorrow. But, we just never get around to it. And, again, as we discussed in the past, there's two scenarios. One individual built a business for over 20 years, didn't have, the various covers in place, and unfortunately passed away. And that whole business structure collapsed because of, there being nothing in place to look after the family. So that becomes a challenge. Then the other individual did have it. And while he was recovering in terms of broken legs, and everything else, he knew that in his personal capacity, I think it's to look at it in two ways, is that, from the business perspective, you'll be able to get that income, look after it, and it's going to vary in terms of the size of your business. Sure. At least something there. And again, I think we owe it to our families, and we work hard, to be able to provide, not only for today, but also for tomorrow, when we're not here. And it's to look at it, and from my side is to start small, start somewhere, at least start that journey and include it. I find a lot of plumbers, will turn around and say, I can't afford it, but can you afford not to have something there? And that becomes a challenge, medical aid for yourself, for your family, all of those things. And I say, I'm sitting at 61 now, and I wish, I had done certain things that you have in place here and done it earlier. Because again, it just means that you're playing catch up, and we all know what happens when you're playing catch up. And I would, again, is just to emphasize the fact that there are individuals like yourself that you can have that one-on-one conversation with and get those prices, go out there and compare. and compare apples with apples and not apples with pears.
And absolutely make sure it's affordable for you.
Yes.
That's like I said, you can get a blanket cover, but who knows what you're insured for and what you're going to pay for.
Yeah. And I mean, it's some of the things that we've had from plumbers in the past, where, like you're saying, all their tools in the back of their vehicles, even in transit, so the vehicle gets stolen, but, now you're sitting with 100,000 rands worth of equipment that, wasn't covered being in transit. So all of these little things and these fine details seem to come back and bite us somewhere. I remember once having, lengths of copper pipe flying off the roof rack of a car and smashing other cars, so it's covered. Had we not had that, then, we'd be in some serious difficulties, dropping a spanner off a roof and hitting somebody's car. And it would always be the Merc or the BMW, and it won't be the Taz or whatever the case may be. But again, it's just safe in the knowledge of it's not my problem. I'm insured for that. Same if you fall through the roof, you've got the cover. Take away the headache and place it with your insurer. Let them deal with it. And that's what most companies ask for is, why do you now have to run around and look for quotes and try and get this and take the botheration? We all professionals in one way or another. And is to just hand it over to the professional and just say, look, off you go. Just get this thing sorted out. That's what I pay you for. So I think, Byron, thank you so much for today.
My pleasure. And thank you for your time, Steve.
Everybody's attendance, has learned something and start somewhere.
I just also wanted to highlight one last thing, and that it sometimes seems to slip through the crack, and that's the estate wind-up. So wills are one of the easiest things to do. Most people don't do them, and they're actually really affordable to implement. So I would recommend that as one of the key elements as well.
Thank you, Byron.
All right, sir. Thank you. Have a good day.